Ready, Fran? Let's go.
Ready. All right. So we just want to take the time to thank everybody that logged on tonight. And we want to send a special shout out to the nurses and frontline providers that came to our event over the weekend. It was a good turnout and we had a lot of good real estate conversation. So tonight we'll be going over the nursepreneur strategy and how we conquer real estate. Specifically, we're going to go over 506B versus 506C offerings.
Before we get started with our presentation, here's a disclaimer that you guys can take a little bit of time to read. Just basically letting you guys know that this webinar is just for educational purposes. The information is just that, information and education, and it's not a solicitation to invest in any specific offering or an invitation to invest in any specific.
So who are we? Nurses to Nursepreneur. Nancy, Fran, and I has a mission to guide our fellow nurses and healthcare professionals on a journey to financial independence through real estate investing. We want to make real estate more accessible to BC healthcare professionals and nurses. We are nurses, right? We know your pain point. We know we work hard. We know we pay. Most of the time that we spend is to take care of others. So we want to be able to help guide you so you don't have to work and rely on W-2 incomes only. We want you to work because you have passion to work, not because you have to work. So I want to be there for you guys and guide you through the financial independence to the real estate investments.
So our nursepreneur agenda is that we know as healthcare professionals that you dedicate all of your time and energy into caring for other people. And we understand that because we go through it on a daily basis. All three of us still have a W-2. And we created this opportunity to provide others with a chance to give back to themselves and put themselves in a better financial situation. Real estate provides that opportunity where you can make more money without having to work extra, and you get passive income, which can beat traditional savings and retirement accounts. It also provides potential for passive income, wealth accumulation, generational wealth, and diversifying your portfolio. Specifically tonight in this presentation, we'll be going over what is the role of an SEC in investor protection, understanding the difference between a 506B and a 506C offering, and the credit and the criteria for an accredited and a non-accredited investor.
Let's go over what exactly the SEC is. The SEC stands for Securities and Exchange Commission, and it is a U.S. federal agency responsible for enforcing the federal security laws and regulating the securities industry. And it was established in 1934 as a response to the stock market crash of 1929. What is a security? A security refers to a financial instrument that holds some type of monetary value and can be traded. This includes stocks and bonds. It includes limited partnerships in syndications as well. What is the mission of the SEC? It's to protect the investors. They want to make sure they maintain fair, orderly, and efficient markets and facilitate capital formation. It ensures that investors receive accurate and complete information about securities being offered for sale, thereby promoting transparency and fairness in the market.
So what are key responsibilities of the SEC? There's several responsibilities of SEC, and one of them being that they are regulating securities markets. They're ensuring that the security market is operating in a fair and efficient manner. They're monitoring activities to prevent potential fraud, prevent market manipulation or insider trading. They also oversee corporate disclosures. SEC requiring public companies to disclose any meaningful financial and other information to the public to ensure that the transparency is there so investor can make their informed decisions. SEC also enforcement actions. They investigating, prosecuting violations of security laws. They're imposing penalties and any sanction on individuals or the company that break the rules. Another responsibility of SEC is they in educating investor. They're providing the resources to help investor understand what is their rights and what the risks that involved in the investing. In the SEC website and outreach programs, there are several educational materials that investor can look into and learn about it, to be more proficient about it before and more comfortable with it before they're investing in any specific offerings.
So what does the SEC in a syndication look like? For us as nursepreneurs to present an opportunity to potential investors, we follow what is called a Regulation D offering. Regulation D has 506B and a 506C under it. These regulations fall under the Securities Act of 1933. It provides an exemption for us to not register with the SEC while still following its requirements. It ensures that the offerings are conducted to protect the investor while allowing the active investor to raise capital. Even though we're not required to register with the SEC, there's still compliance and due diligence that need to take place. The SEC ensures that as syndicators and active investors, we comply with their rules and that we're protecting the passive investors from any fraudulent activities, and that we as active investors are giving accurate and correct information so that passive investors can make an informed decision. The SEC also encourages transparency and accountability between different teams and different active investors.
Let's start by understanding what a 506C offering is. For a 506C offering, for us active investors, it gives us increased reach. We are able to publicly advertise a 506C investment opportunity, so you will be able to see it on social media, on magazines, you name it. We can publicly advertise them. We are able to reach a larger pool of potential investors, and we can raise unlimited capital. A 506C offering, though, is for accredited investors only. So only individuals or entities that meet a specific financial criteria can invest in these types of offerings. And us as active investors, we have to take reasonable steps to verify the accreditation status of investors.
So what is the criteria for the accredited investors? As an investor, for you to be qualified to be accredited investor, there's several requirements that you can, look into and see if you can be, part of that requirements. One of them is the income requirements. Passive investor and active investor who want to invest in the 506C offering required to have annual income over $200,000 as an individual or $300,000 as a joint for the last 2 years. If you're not qualified as an under income requirements, you can also qualify as a under net worth requirements, which means you have to have net worth over $1 million, excluding your primary resident. That net worth could be included from the 401k, any prior investment that you have, to make sure that all the net worth you have is over $1 million. In addition to the income requirements and net worth requirements, the professional certification can, certain professional certification can also qualify as the accredited investor. For example, the CFP or Certified Financial Planners, or CPA or Certified Public Accountants who have extensive training in financial planning and investment management.
Fran, you're on mute.
Sorry. So what does the verification process for an accredited investor look like? There's documentations that are required to be presented, such as tax returns, financial statements, or a third-party letter. Third-party verifications can be provided by a CPA, a licensed attorney, a registered investment advisor, or a broker-dealer. Self-verification is not permitted on a 506c offering. It is not enough information, and therefore additional documentation will be required. And here we have examples of what an accreditation letter looks like. On the left, we have a third-party verification letter, and on the right, we have an accreditation letter from a CPA. Nancy, you're on mute now.
Sorry. So the verification process step is quite simple. First, you have to make sure that you gather all the required documents, which include financial statements, tax returns, W-2s, or any other relevant documents that prove your income and your net worth. Then you have to choose a verification method, whether you want to use a third-party verification platform or you want to have your CPA write you that letter. You submit this document to the third-party verification letter or to your CPA, and they will verify that you actually do meet accredited investor status. They will then give you a letter. And once you get this letter, you will provide this letter to the active investor whom you will be investing with.
So let's go over the 506B offerings. In 506B offerings, this type of offering allows the company to raise capital without publicly advertising. In 506B offerings, it allows an investor who are not qualified under the accredited investor qualification, which is including the incomes or net worth requirements. However, it's only allowed up to 35 of a non-accredited investor to be part of this offering. They are in this type of offering, we cannot advertise this investment opportunity publicly. And for the non-accredited investor, you have to be financially sophisticated to understand the risk involved in the 506B offerings.
Considerations for a non-accredited investor. As mentioned by Pat before, there is a limitation on the amount of participants allowed in a 506B offering, which is up to 35 members. And the individual investor must understand their personal financial status and how much risk they're able to take.
It's important that we're always making informed investment decisions, whether it's in a 506B or a 506C offering, but it's important that you understand the difference between them. It's also important to make sure that you know of all the risks that come with making an investment, which include market risk, management risk, and liquidity risks. With whether it's a 506B or a 506C offering, through a syndication, usually the holding periods are longer, are 5, 7, or 10 years. It's important to keep that in mind because, in case you need access to that money, you won't be able to have it until the business plan is completed.
So what is the due diligence for the passive investor? Nancy, Fran, and I always stress the importance for our passive investor to do your own due diligence. The passive investor should research the teams that you're going to be investing with, look at their past projects, what are their track records, what their reputation. You also should evaluate investment opportunity that including property details, any financial projections and risk factors involved and the specific investment opportunity. As a passive investor, you should also look at the legal documentations, for example, the private placement memorandum or PPM, and you should consult with your consulting teams or lawyers who specialize in the real estate investment. As a passive investor, you should also understanding the terms, including what is the minimum requirement to be invested in that specific offerings, what is the whole period, and what is the exit strategy. So you can make sure that the specific investment opportunity is the most suitable for you. That's why we always recommend our passive investor to do a thorough due diligence before investing in any deals.
So what are the key takeaways that we want you guys to remember from this presentation tonight? First, the role of an SEC in investor protection. They're here to regulate and oversee every investment transaction deal in a syndication. They enforce the law and they ensure that there's a transparency in the market. They also provide investors with educational resources so that passive investors and active investors both make an informed decision. Secondly, we want you to understand the differences between a 506B and a 506C offering. In a 506B, there is no general solicitation and only 35 non-accredited investors are allowed per deal. In a 506C offering, it is open to the public for advertising, but it is only for accredited investors. And if you realize through this presentation that you do qualify for that accreditation status, and you have the income and the net worth requirement, or you have the professional certifications, you can gather the documents and go through the verification process that was provided.
I hope you guys learned a lot tonight about the difference between a 506B and a 506C offering, and accredited investors versus non-accredited investors. As nursepreneurs, in order to help you and to provide more education, we have bi-weekly newsletters that we put a lot of time and effort in creating so we could share with you. We know how busy we can be as nurses, and sometimes we don't have the time to sit down and read a whole book or listen to a full podcast. So our newsletters are a resource that's available for everybody that wants to learn more about real estate. They are basic, they are very easy to understand, and they are also short. They're not really long. So we encourage you to scan the QR code that's on the screen and sign up for our newsletters. Like I said, they're bi-weekly, and it's basic real estate, and we move along with the topics as well. So join us, join this nurse-led movement towards financial prosperity and freedom, and let's build this future together.
In addition to the newsletter, Nancy, Fran, and I also encourage you guys to book a one-on-one call with us. You see the QR code in front of you, that will send you straight to our Calendly link. Like I mentioned, we want you guys to book the call with us so we can go over in more details. What is your financial goals? What is the investment, what type of investment opportunity that would be most benefit you and most suitable for you. So don't be shy, book the call with us. We would love to talk to you and connect with you more.